Hey folks, this is Kunal from TradingSim. It's Friday morning. I wanted to put a quick video together to walk through some of the action we've seen in the last couple of days. The S&P has dropped. It dropped about 125 points, 120 points from on that Brexit news. What's happened since then is it's quickly rebounded and been gapping higher for the last 3 days and had pretty substantial gains. Some people will attribute that to short covering. Some people will attribute that to end of quarter rebalancing. Whatever the case may be, the market has taken back the 200-day moving average, albeit on low volume, and it is coming into the 20 and the 50-day moving average again. And so, this gap area up here at 210, so 2100 on the S&P could be retested again. I'm not going to sit here and guess where this thing is going to go at this point. I want to let this volatility settle down a little bit. I really don't see this thing running 200 points without any pullback. So this is a place where I'm going to be looking to see how the market reacts, and we'll take it from there. I think going into this July 4th weekend, there's really not going to be much downward activity, and historically speaking, that just doesn't happen very often going into this weekend. So let's just come back next week and see how the market plays out. At this point, it just over the last couple of days, it's been pretty difficult to find any momentum trades. It's really been a broad-based market rally, and so today I just wanted to cover a trade that I saw yesterday, and it was on SGY, and so I'm going to make this pretty quick. So what we've had here on SGY, this is a gapper from it ran from 50 cents up to 11, almost a 2,000% gain in a couple of days. Very interesting momentum stock. You don't see these types of moves very often, but this was a decent trade to be had. And so what happened yesterday? We had a major doji here back on the it's really an inverted hammer back on the 22nd of June. And this level really is going to be a major resistance area. And so on Thursday we gapped open, ripped higher over that level. That was at about 1050, so that was like right down here. Took it out, squeezed a lot of people, and they took it up to 1120. What happened right after that, you can see there was a big red candle. It brought it down, and so when you see that type of reversal, you have to take caution with that. That's typically indicating, especially at a very big resistance area, that this is going to be an area that is going to take some time to get through. That's kind of what this is saying, and you want to be on caution with a red bar like that. That's not exactly what you want to see. However, this is a high momentum stock, and so what we're gonna do. A lot of day traders, right? We've talked about this before. They like to see how these stocks behave at those 9 EMAs, and again, when you see a move like this down, this red move in the last 3 bars, it typically indicates that the stock, if it's going to recover, it's going to need time to recover. We're not just going to see this massive up move, massive down move, massive up. It's not going to keep continuing like this. When I see moves like this, I want to see base building. I want to see the stock kind of recover in a healthy way. And so let's just keep an eye on 1050. That's going to be our area that is our line in the sand, right? That was the high of this big candle here from last month. So as a day trader, I'm going to be looking at the 9 EMA. That's what these that's what these traders are doing. Early in the morning, they're looking for those snapbacks to the 9, and they can look for areas where they can buy it. And in this case, since we had this red move down, if I'm going to buy a 9 EMA pullback, I'm probably going to look to scalp it, because I want this thing to take some time and recover from what we saw in that AM. So you can see here, I'm moving forward a little bit. We're at about 958. We had one test of 9 EMA, 2 tests of 9 EMA. Above this 1064, I'm going to look for a scalp. And the next logical area of resistance on this stock is probably going to be right around a whole number, which is going to be 11. Another area we could look at is so 11.25, 10.23, 50 cents, 10.75 to 11 is going to be an area that we're going to look for. So if we got a 10.65 entry, we're going to look at 10.75 very closely, but really look for 11 being that whole number. Right, so now on this bar we've taken it out. We would have got long at 10.65. You can see we came back, we tested the 9 EMA, so this is going to test your patience a little bit. But we're long 10.74. Let's see what happens here. We want to be very careful. We ripped higher to 10.98. So at this point it's pulling off. I want to be out the position. I really don't think it's going to run back above 11.20 on this move. Again, we had this major pull down here, major pull down meaning 8% roughly, and we're ripping back up. If it goes back and it takes out 11.20, well, no problem. I'm going to miss 20 cents, 30 cents. I'm okay with that. I got to book profits. I like to get ahead early in the morning. It's very important for my psyche to do so, and so I would have taken some profits there. Let's just continue to see what happened here. So we got to pull back here. That 9 EMA was taken out, and so now what are we doing, right? This 10.50, we're going to mess around with this 10.50. We have a cluster of 3 lows here, 10.34, 10.41, 10.42. We didn't take out that previous low. That's very important, actually. When you get into a support area and you don't see those lows being violated, it's trying to tell you something. But I spoke too soon. So it did take it out. 10.34 is that low. Double bottom to 10.34. Let's see if it can hold 10.34. It did. But what I said earlier is very true. You're going to see those triple bottom tests sometimes, and you're going to see lower highs being formed, and those are very bullish. Especially on stocks that are gapping up like this, and they're holding those support levels. As painful as it might be on pullbacks down here, this is the type of 1, 2, 3. These are the types of pullbacks you want to see because it indicates that there's support in the market. In any case, right, we have now what we have is in our line in the sand. It is right around 10.34. We know we have 10.50 from the previous high. We've gone right back above that 10.50. That's a good sign. We're taking back the 9 EMA. And we're starting to move a little bit higher. We're just chopping here. I mean, there's a lot of chop going on. Okay, so now what we've done is we've taken this. This is an area of resistance, right? We came up here, we wicked, we couldn't close above that level, and then tried it again and went down. So this is an intraday area. We're holding the 9 EMA. This is nice. Really above, if you wanted to get back into this, above 1080 could be a good area to get in. So we came up to this. This was a previous high right on this chart, right? It's intraday level. Again, important. We're above this 1050, and we're holding this 9 EMA, right? So we messed around here for about 25 minutes, and then we took off right through that level. And so now my expectation is that we're starting to clear levels. 11 and then 1120 are the next areas of resistance. Now, I don't want to see this bar being taken out on a low. These are like big expansion bars. If they break, that indicates that there was a short squeeze and you're going to get trapped. So you want to be out. You want to stop below those kinds of bars. But all is looking good. We're breaking out 11.13. Right? We took the high of the day out 11 and 20. You're going to take, if you bought in at 1080, you're going to take some off at the high of the day 11.20. You're going to have to be out, which is what a lot of traders are doing up here. Right at this point, we started seeing the 9 EMA break down at 11. About 1097. I'm going to be out of here about 1090. That last piece is not going to be making that much money, but you could have sold that spike to 1120. If this thing wants to go higher through the end of the day, I'm fine with it. But you got to trade your rules. You can't deviate from those rules, and it did. It broke higher. But as a trader, I'm not sitting there kicking myself on something like that because My goal is to book profits. I'm not here to gamble and sit here and pretend like I know what the market's going to do. I don't. I have to trade what I see. And it's very easy to look back on a simulator and say, oh, I could have done this and that, but the reality is that you got to be a risk manager. So the trade was right. It went significantly higher. You could have looked at this as a cup and handle as well, right? We could have traded that. I didn't do that. But that's another trade that could have happened when you saw 1120 breakout. So when 1120 broke out, you would have probably had a stop under 11. This is a nice area of support. And there was nothing to tell you to get out of this position until you hit 12, another whole number. But this was a very strong stock. You could see the volume started to pour in here. And actually, this would have been a good long entry. Right here, this would have been a great long entry. Volume was pouring in on that breakout. So there was a continuation in store. This is pretty obvious. Again, I didn't take that trade, but you definitely could have. So you should go back and study this chart and try to replay it and go through it. There was a lot of opportunity in this all day long. And so if you have any questions, please email me at admin@tradingsim.com. I hope you guys have a great 4th of July, and we'll be back with some videos after the break. But best of luck trading. And one last thing, I have to plug TradingSim. Take our 7-day free trial. I think this thing could really improve your trading, and you could get a lot better by getting the repetitions in. That's the key here. We allow you to replay over 2 years worth of historical markets in a DVR fashion. So you can basically open up any stock from any single day and cycle through them as if you were trading them real time. It's a really great tool. And I hope you guys try it. Again, feel free to email me, admin@tradingsim.com.